Okay, so before we get into this chart example on the screen and before we move forward to module 2 and start diving deeper into all the order flow information, the software, the tools, we need to pause and understand why module 1 is so important, because module 1 is foundational. And I'm not just trying to talk it up or just say a buzzword, because if you don't understand AMT or auction market theory, everything that comes next will feel confusing, noisy, or disconnected. So I know a lot of you have already been trading with candlestick charts up to this point. Maybe you trade classic patterns or trend line breaks, or you're deep in SMC, smart money concepts. And I want to be very clear about one thing from the start. And I know I've said this, and I'm going to keep saying it, but none of that is useless. Those frameworks are actually really good at one specific thing. They help you define where to look for a potential trade. Where most traders go wrong is assuming that where to look is the same thing as what is actually happening, but it isn't. Candlesticks and structure describe outcomes. They are formed after the auction has already taken place, though. They show you what price did after decisions were already made by market participants. What they do not show and what they cannot show is liquidity and that reaction with the liquidity in real time. So candlestick charts cannot show you where limit orders are actually resting. They cannot show you whether aggressive orders are being absorbed, whether resistance is still present, or whether price is even allowed to move. That missing layer is why so many clean A++ textbook setups continue to fail, y'all. And I know this is relatable because I've heard your stories and I've lived it myself. So I know a lot of you have been there. You have a textbook order block, you get a clean market structure shift, you wait for the break, the retest, the newly formed order block or fair value gap. Everything looks perfect. I know. I get it. I've been there. I've lived it. And you still end up losing a lot of those trades. And it doesn't mean that setup was stupid. It doesn't mean SMC is useless. It just means the setup was incomplete because you were trading it blindly. Now, here's the uncomfortable truth most educators will never explain. You can have a perfect setup, but you still are trading directly into a wall of liquidity. If there's a massive sell wall sitting above price and that wall doesn't move, price doesn't move either. Now, no matter how good the candles or the structure looks or how confirmed that entry model is, candlesticks don't show you where the liquidity is. Market structure indicators, they don't show you all the information like order flow software can. And that is where a lot of confusion and frustration comes from in the trading education space. You hear a lot of SMC and price action educators saying things like, we teach how the markets actually move, or we teach the real mechanics of price, or everything you need is in the candles, or everything you need is in SMC. But if that were fully true, ask yourself this. Why do so many of those traders eventually start adding more confirmations? Why do they start introducing SMT divergences, open interest divergences on TradingView, market cipher B divergences, vector candles, big trade bubbles, volume-based indicators, additional filters layered on top of structure? If candlesticks alone showed you the full picture, none of that would be even necessary. This is where the contradiction shows itself. Traders are told you don't need indicators. Candlesticks and structure are enough. But when the entry model starts failing, the famous order block, structure shift, retest model keeps losing, the solution suddenly becomes another confirmation. And this is where most traders get stuck. They're not just strategy hopping, they're confirmation hopping, they're entry model hopping. They're hopping from one filter to the next. Why? Because intuitively, they feel it. They feel that they're missing something. They feel that they're not seeing something. They feel that price is doing things their chart can't explain. And they're 100% right. What are they missing? They're missing liquidity. They're missing the auction itself. Markets move when liquidity is removed. Markets stall when liquidity holds. Markets fail when liquidity refuses to step aside. Structure is the result. Liquidity is the cause. This is module 1, auction market theory. You have to get this down first. If you cannot see liquidity, you're making decisions with partial information. It doesn't make you dumb, it just makes you underinformed. And this is why order flow is not a replacement for what you already know. It's the missing layer underneath it. You can absolutely trade using order flow alone, though. There are other ways to see structure. You can see structure through profiles, acceptance, rejection, and value. But if you are using SMC, price action, market structure, or anything else, order flow completes that picture. Structure tells you where to pay attention to. Order flow tells you whether something is actually happening there. Now, this is also why so many traders keep chasing new strategies. They try one SMC model, then another. You see this a lot with ICT traders with many different entry models. Then you start adding divergences and indicators, just like we talked about before. So, I think traders think the problem is what they're trading or how they're trading it, or the confirmations are not good enough. But most of the time, the real problem is how they're reading the auction, or they aren't taught to read the market as an auction at all, and they don't know how. They're reacting to activity instead of understanding permission. They're interpreting movement without knowing whether resistance still exists. They're asking up or down before asking the most important question: is price even allowed to move? What walls are around price? So, everything you learned in Module 1 exists to fix all of that. It's not here to give you signals or entries, but by giving you a mechanical understanding of how markets actually operate. Markets are auction. Liquidity is the constraint. Effort does not guarantee results, and market state defines what behavior is possible. If that mental model is not clear, the tools will feel very overwhelming in the next module. If it is clear, the tools will finally make sense and you'll be able to connect the dots just fine. Now, in the next module, we're going to build visual literacy inside the software. You're going to see how all this appears inside real order flow platforms. You'll see the liquidity, absorption, pressure, and more. You'll see why so many trades fell before a candle ever confirms anything. You won't need to take trades on faith anymore. You will be able to see the auction for what it is clearly. And once you do, you'll never look at a clean textbook setup the same way again, no matter what your strategy is. So now let's go over this chart example really quick and just give you an idea of what I'm talking about visually. So what we see here is a typical SMC price action setup. You have a high time frame order block. You have your lower time frame market structure shift after your order block has been mitigated. And then you try to take a trade on a retest order block after your market structure shift. And this is your confirmation. Most likely, you might be taking some profit here, or you're looking for that range high up here, or maybe you have like a key level here. So you enter in here and you want to take profits up here. It's a great idea. It's a great foundation. There's nothing wrong with this. It's just half of the truth. But if you want to see x-ray vision, you can see here what order flow can look like and what order flow traders see. So again, this is the same example, but what traders do not see is they don't see all this liquidity sitting above this high. And this is a lot of Bitcoin sitting right here. So we can already suggest that once price gets here, these buyers buying into this area are going to get absorbed. So if an order flow trader knows that, and an order flow trader understands how big money enters the market, they can still enter here. Absolutely. You can still take this trade. You can scalp this up to here, take your profit, leave a runner, and maybe even open a head short if you get what you want to see, the activity, the behavior in this area. And we're going to learn what we want to see in the later modules. However, if you were trading SMC and you took your long here, or sometimes some people take the break right here, and this candle closes somewhere right in here, they get in right here. They don't even wait for a retest because sometimes this retest doesn't even ever happen. That's also another issue. So if we longed here and we were expecting this high as our target, we wouldn't see this and it would do something like that and we get stopped out at the other end of this order block, or maybe even the swing low. Now, here's an even worse problem that I have heard and have seen myself and have spoken with so many of y'all about. And again, it's the same SMC setup. You're taking a long here or on the break itself. Now, if you took a long on the break itself and you didn't use order flow software to see this heavy selling position here, you get absorption here, and then eventually you get taken out of the trade here or here, wherever your stop loss is, most likely the other side of this order block or the swing low itself. Also, if you were to take this retest trade, you didn't even notice the signs ahead of this potential trade here. If you saw that big money was getting in here and loading up their bags, this wouldn't even be a trade. Furthermore, let's just say you took it and this absorption already happened. So a big player was already positioned here. And what usually happens after that, they continuously set up walls to absorb even more traders and to fill even more of their bags. They want a bigger position. So if you would have taken a long here or here, you would have gotten stopped out. However, if you would have seen this very simple information, you would have saved yourself a loss. And that is the extreme value of using order flow software. Now, liquidity levels or a heat map level, order book is only one tool in our order flow software. I'm going to be teaching you much more than that. So let's wrap this up. If anyone is telling you you don't need order flow or all you need is candles, all you need is SMC, order flow is just going to confuse you, that is an incomplete truth. Now, to be transparent and honest, they're not wrong. You don't need order flow to trade. People traded markets long before order flow software existed. And yeah, even before SMC existed. But if you want a deeper understanding of how markets actually move so you can make better decisions, or you want more opportunities, or you want to know when not to trade just as clearly as when to trade, or you want more confident entries, or you like to clearly see where big money is positioned, then maybe you are missing something and it's obviously not an indicator or a special new entry model. Now, with that said, I'll leave you to decide because, in my opinion, the real question becomes this. If you now understand there's a way to see more of what's actually happening with proof, not guessing or hoping, why would you choose not to use order flow?